A live stream. We're going to be going through the markets again, following on from yesterday's session, which was very popular. There was lots of anticipation in the market there, and we had FOMC come out last night, and there's been a few developments, to say the least. So we're gonna go back in, take a look at the same 8 pairs. And I decided to stream this out again just so the broader community could see kind of what we were looking at, how that played out, what we're now looking at, and it will give you guys a chance to really follow along and see that whole process of analysis, identify, prediction, decide, and hopefully we may get some opportunities today. Before I get kicked off though, has anyone got any trading setups on their radar? So has anyone got any trading setups that they want to share with us? Anything that's potentially setting up later today that they're looking at? Maybe something that's set up and you're just practicing and you're identifying it, but you're not actually trading it. That's also fine. Let us know if you've got anything like that. We're going to be going through the same 8 pairs. Same 8 pairs, same order. We like to see everything as consistent as possible. So we're going to be going through everything the same way we always do. And if you guys are in the tier 1 trading community, you can type here, you can engage in the chat here, or you can watch this on one of the streams that are going out on one of the multiple platforms. YouTube, Twitch, Twitter, Periscope, Facebook, in my live Facebook group. You can watch it all there. So, how's everyone doing? Hope everyone's doing well. If you did enjoy the, let's bring on the chat. Who we got here? Good morning, good morning, good morning. Lots of great feedback about this. I may do this every once in a while, but we do keep this to the live trading session. The reason being is, yesterday, obviously, there's been a lot of anticipation. There was not much going on, and we were kind of more relaxed. When they're, under normal circumstances, whatever you can call normal these days, there is you need to focus a little bit more. So we keep it in our trading community. We've got a very tight room in there where we're going through laser focus, looking for opportunities. Because there was not much going on, and I wanted to get you guys involved in what was, what we were looking at, I thought it'd be a great idea. And now we had FOMC come out. There's been some developments, shall we say, in the markets, and some of the developments are playing into what we were looking at yesterday. For instance, one of them is the dollar yen. So I want to go through that and follow on. I don't think it was very fair to just kind of leave it at that. I want to come on and now show you guys. Now the market might have been kind of pushed into life a little bit, what the opportunities are, what we could look at, what we could take advantage of. So I decided to do it today as well. And we're going to get stuck in just a moment. So if you guys have got any questions or any setups, let me know. Remember, if you're looking at any trading setups, please fire in those 4 pieces of information: the market, the time frame, the strategy or the setup, just roughly so we know what it is, and then the start of that setup, the impulse leg or price point of that setup, so we can quickly go to that chart, identify the setup, look at the start of the setup so we can identify where it all plays out, where the targets are, stops to go, and all the rest of it. So we're going to get stuck in. If you did enjoy that session yesterday, and you did enjoy, you enjoy this style of video, please make sure that you give the video a like. Make sure you subscribe to the channel as well so you don't miss more videos like this. But it will also let me know that actually this is valuable, because we don't want to do things for the sake of it. It's that's stupid. So without further ado then, what I decided to do is to leave on, the indicators and the drawings from yesterday. I thought, normally what I do is I wipe off all the drawings, I do the pre-market, which I've done on my NinjaTrader account, but I do the pre-market analysis, then we wipe off all the tools, we start again, we go through it again. There is a lot of power in doing that, and it's a very good habit to build by just keep removing the tools, drawing them back on, removing the tools, drawing them back on. That repetition of analysis will really accelerate your discretion as a trader, and it will also it will force you to keep consistent, analyzing the same, keep your analysis consistent. And lastly, it also removes that kind of tunnel vision that some traders get, where they put all the markings on their charts and they kind of got this arrogance about their analysis where they think, well, that's just going to play out now. And then they miss opportunities in the meantime because they've got all drawings all over their charts. So it's really important to keep doing the analysis, keep refreshing. Not saying that you need to be stuck at your charts all day long and drawing, but it really pays. Each time you go to analyze your markets as fresh, delete the tools off, then start again, even if it's the same analysis. It really does pay to do that. So we're going to start on Aussie CAD. You can see Aussie CAD. Let's just flick through the pairs first of all. Okay, we've got our trading community here. So if you guys in tier 1 have got any setups, let me know and I'll bring those out to the live stream. Aussie CAD, not much movement. Aussie dollar, we've seen a push down to that previous support level, which is interesting. We've actually seen a bounce off of that level as well with this rejection candle. So we're going to take a look at that. We're really going to just look at how price has behaved. I think this will be a great opportunity to just look at price action. What happened? Where did price go following the announcement? Where price settled? What clues that price is showing us now as to what might happen next? Euro dollar had a push down out of that channel. Pound Aussie, not too much movement on the pound Aussie, but it's a bit choppy there. I'm not really interested in the pound Aussie. Pound yen, again, similar, not too much movement. Dollar yen, we've pushed up to this zone we were looking at. Remember I said this? This was the zone I was interested in. On the close of this candle, which is in 20 minutes, if we've tested the high, I'll show you guys how we will enter that and look for targets down at an inside structure level, just at 110.33 with tight stops above the highs. So we could get involved in that in 20 minutes time. And we've had some movement on the New Zealand dollar finally, a push down as well. So we can take a look at that. Naomi says, always refresh. Sometimes they adjust market data after hours and then it can be a pip difference, making a difference between a new structure high and not. What a great point, valid point. Yep. If the market data changes, if you haven't refreshed, how you do your analysis will determine the difference between what was maybe a new structure high and what isn't. And that has happened many times before. So make sure that you're keeping fresh. Reset your analysis, your indicators, your tools, your drawings, and then move on and do it again and again. All right, so I'm probably going to leave the chat here on, just above my head here, because we've got all of that side of the screen for the markets, and I can kind of scroll that up. If I need to go to the 4 hour, maybe I will enhance the screen, but you guys can follow along, I'm sure. So Thursday's pretty much a summary day. We had non-farm payroll, FOMC, not non-farm payroll. Non-farm payroll a couple of weeks ago, which caused many of the markets to spring back up to where we left off. We then had FOMC last night in the UK. It was yesterday afternoon in the US. And we've seen some developments in these markets, right? But what we're going to do is just summarize what's happened on each pair, how price has reacted and what's likely to happen next. So we're going to start on the Aussie CAD. We're going to go Aussie CAD, Aussie dollar, euro dollar, pound Aussie, pound yen, dollar yen, New Zealand dollar. All right. Before we get stuck in, has anyone got any questions? If you have, please let me know. If you want to look at any other pairs other than those 8, please let me know. And we'll do our best. And then if you've got any setups that are kind of immediate, then fire them in. But remember, fire in those 4 pieces of information so we can quickly identify. Oh, keeping me awake. Anyway, so Aussie CAD, not much movement on you know, on the big, this is the macro view of the market. This is the Aussie CAD daily. Now, following a test of this support level down at 92.50, again, I did a video on that on the YouTube channel. We bounced up off of that during non-farms. We have been moving sideways, and this is one of the pairs where we had the FOMC didn't really make too much of a dent, but we did also have Asia session news out last night. We had unemployment news on the Aussie dollar. So there was a little bit of movement overnight. If you guys are in the UK, this is all overnight. We kind of had a dip down last night, pushed back up to where we left off. So really not too much to write home about. We're still in consolidation. Okay, identify consolidation, predict further consolidation, decide how to get involved. Well, the only way to get involved in this in my playbook would be in the form of a ratio pattern, okay, because I'm not trading the structure consolidation, so it'd just be a case of bringing on the lowest time frame I can trade, where I can see the most recent or the most kind of closest to setup pattern, X, A, B, C, D. Now this is it's either going to be a very deep Gartley formation for you, or it's going to be a butterfly pattern. All right, so I'm going to just double check the data here. Go swing high to swing low with the fibs. You can see we just tip. The high of this candle is 93.81 and the 786 is 93.82. What does that mean? It means that as long as we put in a 618 retracement for the C leg, which we haven't done just yet, but if we do that, we are going to, and then we complete, this pattern is what we're going to call a deep Gartley pattern. And the reason it's a deep Gartley pattern is because of that B leg. It pushes right up towards the 786, but doesn't touch the 786, which means it's a valid Gartley, okay? But because the B leg is so high, because of the rules for the completion point of this pattern are an extension of A to B, it means the 127 is going to be right bang on pretty much the X point. Now, what does that mean? Why is that good? Why is that a good thing? It's a good thing because as long as we do put in a valid C leg, it's a good thing because if our stops are going above X and our targets are a conventional 382 retracement from the A to D completion, then your reward to risk is always going to be pretty decent. If your stops are going above X and your targets are going down at the 382, you can see that's nearly a 3-to-1 reward to risk trade there. So that's why we love deep Gartley patterns. That they're even better on the pound yen and pound Aussie, obviously, because they're more profit, tighter window for entry, tight stops, good reward to risk, great ATR, so lots of profit. But there it is, right? Now, I'm not going to leave this on because this is a way off. We haven't put in a valid C leg yet, so there's no point even looking at that just yet. But it's something to keep an eye on for later today, maybe next week even. We'll keep an eye on it and see what plays out. So daily time frame, consolidation, predict further consolidation, decide how to get involved. We've got consolidation setups in our playbook that we can utilize. We know they've got high probability. This particular one will be a great reward to risk with a high probability strike rate. So great setup, but requires some patience, requires some waiting. Other than that, nothing else on this pair whatsoever for my trade plan. If you guys have got anything, let me know. How often are these sessions, says Name. These sessions are Tuesday, Wednesday and Thursday in the London live room. Jason, do you take partial profits? I have done on this particular account that we run in the live room, we used to take 2 targets. I just take 1 target now because it got very confusing for different people with different different strategies. So we're one in, one out. So anything that you see in this account is worst case scenario. In my other account, my swing trading account as well, I sometimes split positions depending on how far we've got to run, whether I can trail stops and squeeze more profits out of the move. But not always, it just depends. It's on a situation by situation basis. Okay, dollar, what's 1 hour chart, 2618 trade, LTC USD. Okay, we'll take a look at that if we have time. Gold daily bull bat has formed, says Mia. Mia's been looking at gold a lot lately. We will quickly take a look at that. This is the bat that Mia was looking at the other day. So there you go. Bat pattern formed. You're in. So what we're going to do now is we're going to take a look at the Aussie dollar. Because yesterday we were still looking at consolidation. But what we were looking at is, I wasn't looking for shorts or structure-based setups because we was right up in the middle of nowhere following this big head and shoulders setup. So we've been moving sideways since about mid-April. And one of the areas that I said that we was interested was this one. We drew on this horizontal line. This was the major level of support. And we've rolled over, and look how price has behaved as we've hit that level. Right, we rolled over, had this big bearish momentum here. Big bearish momentum candle. This is the whole day, and the session closed like it hit that like a brick wall. Okay, so this is why we always talk about structure being respected, because these markets are driven by psychology, and these psychological moves in the market are predictable. They happen time and time again. This is why you can build setups and systems and strategies around these frequent and regular opportunities that play out these patterns. Build your reticular activating system to recognize these patterns, train it, test it, then go and trade it. As long as you find it's got a positive expectancy, you're good to go. And that is what trading is, as I said yesterday. And that's what we teach in Tier 1, how to become system developers, how to build a proper trading business, not just give you a strategy and let you run off into the woods. We got a prop firm training approach. That's what it's all about. So now we've approached this level. Yes, it's a bit choppy looking left. Let's go down to the 4 hour. Let's go to the 4 hour. Let's just zoom in here. Can you see that? Yep. So right here, you can see how we've respected that. We had the big rollover during FOMC, plus we had the news out in the Asia session, which is really what contributed to a lot of this move. But we had a test of this most recent support level. Okay, just as we do that, we hit it like a wall. What might be a way to enter this for a little structure-based setup? A little double top, a double bottom maybe. Now the problem with this is you want to be mindful of where you would be taking targets, because look, we've already tested this inside structure level. So has the move already been made? You could argue that if you went down to the 60 and you got involved here, where you had the retest, you would have already captured the targets. Does that make sense? You would have already captured the targets because you had this test here, another test here of a low test candle, rejection candle, and then you pushed up and you spiked right into that inside structure level, which is for a double bottom trade setup. That's personally where I would have targets. I would have targets at structure. Some of you use Fibonacci targets, so some of you will be looking at like a 382, but guess what? That lines up perfectly with that as well. Coincidence? We got a 382 and inside structure support become resistance lining up together. So in my opinion, that move has been made. This is the difference between looking at setups that are low quality and looking at setups that are high quality. This is going to stop you from giving your money back to the market. And I've always said that if you can see all of the reasons not to get into a trade, you're going to end up with good results. If you can calculate all the reasons and analyze all the reasons why it's not a good idea to get involved with a trade, you're going to end up with a good risk management, okay? And for me, this move's already been made, and because I've identified that, there's no way that I'm going to predict that market's going to push down again and then push up. Might it do that? Yeah, of course it might do that, but the high probability juicy move has been made. Does that make sense to everyone? Everyone understands what I'm talking about there. Hopefully. By the way, if you're watching the recordings of this live stream, the way that YouTube works, I think you can find the stream if you're on Twitter or something, but YouTube seems to lock the recording away for 24 hours. It processes all of the live stream and then it republishes it 24 hours later. So, yep, already played out. Yep, excellent. All right, so that everyone's clear on that. So that's why that isn't a high probability setup for me anymore. It was a great opportunity. We were right. Let's pat ourselves on the back, move on to the next one. There's always going to be opportunities. Don't force trades, don't revenge trade, don't try and get in too late. This one's gone. Yes, you were right. Don't worry about it. There's going to be plenty more like this. All right, that's so important. So important to understand that. So now let's go over to, as I say, we're going to be just skimming through these. It's going to be a shorter session today. Yesterday we went on for like 2 hours, I think, but we're going to keep it short today. We're going to summarize what's happened just so you guys can get that follow on. So pound dollar, we've seen a little rollover on pound dollar as well. We had a bearish move. We closed below. How that's represented on the 4 hour, let's go back to that. 4 hour time frame. By the way, what platform do you guys use? Please type in the chat what trading platform you guys use for the bulk of your trading. Some of you guys use a charting package and a trading platform separate. So you place your trades on your trading platform, but you do your analysis on another charting package, which is very common. There's nothing wrong with doing that. But let us know what trading platform you use. Does selling on that pair count as a higher probability move? Well, look, here's the thing. I wouldn't be looking to sell this. Why wouldn't I be looking to sell this right now? Why wouldn't I be looking to sell this right now? Now, some of you might be, okay? Some of you might be looking to sell, but why? For me personally, there is a reason, and the tier 1 guys will know why I wouldn't look to sell this right now. And that's simply because of this level of structure, this support level. If we break below that support level, absolutely, look, next level of support is down here. We know that these levels are respected, and they're also like magnets, as you know, as we've demonstrated here, right? Time and time again. So if we break and close below this low, down here at 75.98, which happens to be 7,600 even handle number as well, if we break and close below that, I can look to short this down to this level here because we've had the new low, we'll have a new low, and then I can look to continue that on until we get to 75.45. All right, so there's about a 60 odd pip movement there, which I could potentially take advantage of, but I definitely don't want to sell right now because we're at that major level of support. Which is why we use the higher time frame for the prediction and the bigger macro view of the market. What's market doing right now? Where's it likely to go? How's it likely to get there? We do that on a higher time frame, which carries more water, more significance. Then we go down to the trading time frame and we start to see for confluence and, just see the market agree across those time frames. MT4, 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 MT5, Ninja Trader only. Cool. Yeah, I think MT4 is like still the most popular platform out there, just purely because of the because it's just been going a long time. It's free. A lot of the developers develop their systems and indicators over MT4 as well, or MT5 now. Yeah, cool. All right, let me just jump over to the dollar yen quickly because I just want to bring this to your attention. At the moment, now, who's seen my videos on double tops? Did anyone watch the workshop that I put out on double tops on the YouTube channel? you'll know that there's very strict rules for consistency with double tops. And does anyone know the rules of the second test of a double top? Here we go. Caesar's put himself out there. So if anyone knows the rules of the second test, it must test the high zone of the initial test. Now, if we were to look at this, and the reason I'm showing you this now, guys, is because we've got 3 minutes till the close of this candle, and unfortunately, it isn't valid yet. All right, because look, here's the initial test. We need a test of this high zone for the second test. Yes, we've got divergence on RSI. Right, so tick. Yes, we've got an overbought condition, tick. Yes, we're at major structure resistance, tick. Have we put in a valid second top? No, not yet. So the patience has to come in here, because lots of people go, oh, it's close enough, and they'll get in, and close enough isn't the same. Close enough isn't the same. All right, because how will you maintain consistency on close enough? It's impossible. So we need it to test this high zone, and if it doesn't test that, then it's not valid. And it might roll over and we miss out. Well, hey ho, that's the nature of the beast. We might push up, get the test, and then roll over, and that'll be great. We might push up and get stopped out. You know, it really, you have to be consistent. And at the moment, it looks like we're not going to get this set up in 2 minutes time, because we're seeing a big rejection. What does this rejection indicate? It indicates we're likely to see a little bit more of a rollover. Have you missed the move? Maybe, but who cares? Don't chase it. Don't force it. Don't be in a trade that you shouldn't be in, because you're letting yourself down massively if you do that. It's only you're letting down. It's like when you're trying to lose weight and you eat cookies and you go and secret eat cookies, that is you. You know, no one else is going to care. You're the one going to put on more pounds. You know, you're the one cheating yourself, and you're literally back to square one. Because when won't you break your rules? That's the thing. When won't you do that? If you're breaking your rules now, when are you going to stop breaking your rules? Because the moment you stop breaking your rules and commit to that, that's the moment you can start moving forward as a trader. If you just keep taking random sessions, random strategies, random trades, you are not progressing at all. You're just hoping that you're making some quick money. And you might as well go down the betting shop, because it's no different. It's no different. All right, so pound dollar, we've seen a break and close below. Naomi says, if you've tested it, Naomi's jumped onto the YouTube chat. Awesome. Thanks, Naomi. If you've tested it, literally no point. Why spend a year of your life testing to then break them? Makes 0 sense. I know. Well, if someone has that answer, let me know. I've got my own thoughts on it, for sure. Caesar says, are we seeing a double bottom on gold 1 hour? We'll take a look at that. We'll go back to gold in just a bit, because I know Mia's looking at a setup there as well. But we're going to look at the pound dollar first. So we've had a break and close below here again, right? Consolidation. I was hoping for a break to the upside. Why was I hoping for a break to the upside? Because overall, the market's been bullish for a long time. We've been in consolidation since 42, 46 back in February, end of February. We've failed to put in a new high since then. If we was to put in a new high, we would have violated this major resistance zone, which has been respected since that 24th of Feb high has been respected since the 18th of May. We've been hovering around that area. If we broke and closed above that area, that would have provided potentially some real decent support levels that we could look to jump on and shoot for an extension on to the upside. So we could have looked for a bullish trade there. We didn't. We just held the level. We've rolled over. I wasn't looking for any counter move here or structure-based short, because I already made the money back here. I don't know if you guys can see that. We caught this move right here. on the hourly. Okay, so we caught that, we had the fun there. Since then, lots of consolidation patterns setting up. Now we've rolled over, we've violated this most recent low. Does that mean I want to short it? Absolutely not. That doesn't mean I want to short it at all. I want more confirmation for a short. Yes, we've got a potential reversal zone here, but it's not something I feel comfortable enough shorting straight away. Let's see how market plays out. One of the areas that I do think is interesting is, let's go down to the 60 for you guys more intraday. Let's thicken this up a little bit. I apologize when I keep scrolling across the charts. On my NinjaTrader, I can just bring in different charts, but this one, I have to keep scrolling in and out. It's probably making you feel a bit nauseous. But this is an interesting level right here. Okay, this fake break low. Also, if we look left, whoops, straighten this out a little bit so it's nice and clear. If we look left, we've got that previous support level was resistance here as well. If you guys can see that, support and resistance. It's not the best level of structure, which is again why I want more confirmation. I'd like to see a new low here. And the other reason why I'd like to see a new low is because of this. Let's just say that we push back up and we push up and test this level and you look to short here. Okay, let's just say that you're interested in shorting here. Now, where has your stop loss got to go? Your stop loss has really got to go above these highs, hasn't it? For protection, which means that you're going to have, if you're shooting for a retest of the lows, you're going to have an inverse reward to risk profile. If you're shooting for a retest of these lows, you're going to have an inverse reward to risk profile, which is no good. If you're shooting for an extension, maybe you won't, but it's a hell of a lot of risk on the table, particularly with the ATR that the pound dollar's got. It's a high ATR. You're probably looking at, I know this isn't, this is just ballpark, but that's 100 pips on the table there. 100 pips of risk roughly for a move. Now, on the other hand, let's just say that we ended up putting in a new low. Okay, so we got extra confirmation. We put in a new low here. Okay, and what happened then is we pulled back up. Is this a more attractive continuation? Yes. Why? Because we can use the Graystone trend continuation method, which gives us 3 ways of entering, 3 ways of attack, actually 4 ways of attack, but 3 main ways of attack, which means we can attack this setup with minimal risk, good reward to risk profile, high probability, and without having 100 pips of risk on the table. So that's why. Plus, if we get another low, that's extra confirmation that we're likely to push down, which is all the better for us. So that's what I'm going to wait for on this. We're in the middle of nowhere at the moment. I don't want to sell it, don't want to buy it. I'll just wait for a new low, pull back, and then look to jump on the pullback. And there's 3 different ways I can do that. You can go and watch the whole series of that strategy that I put out on YouTube over a 5-part video series. You don't have to register for it. You just go and watch it. All right, it's all there, all there for you guys to follow. Please sub Ty. Is it best to trade on the lowest time frame your strategy works on? No, it's best to trade the time frame that you've tested your strategy on. You don't want to test the system and then trade it on a lower time frame. You need to be trading the system on the time frame you're testing. What kind of entries do you prefer, limits or instant orders? The only limit orders I place are for certain ratio patterns. Other than that, I use all different types of orders. I use at market orders, sell stop orders, buy stop orders. It just depends on the strategy. So for my daily chore, it'll be a sell stop or a buy stop. For the FTB, it'll be a sell stop. For a double top, it would be a market order. For a Gartley formation, it would be a limit order or an at market order. So it all depends on the dynamic situation and what we're being presented with at the time. Is there more scope to go down for pound dollar? Well, let's take a look. If we do, look. Yes, we've got some inside structure here, but really the next support level's all down here. So plenty of room for profits. plenty of room for profits, which is why I'm not in a rush. I want to make sure that we get that high probability setup and then get involved when I know that we've got a high probability of pushing down, tight stops, good reward to risk, yada, 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 all over again. Can you remove the comments from the screen, please? I can do, but then you guys can just not see the chat. So I'll remove the comments from the screen if we need to look at the left-hand side of the screen. I'm trying to keep everything over to this side so you guys can see both and engage in the chat. I think the value of this session is that people are engaged in a chat and we get a conversation going about real trading and the realities of the approach, consistency, discipline, mindset, technicals. That's the goal and the objective for this live stream. Okay, because you don't see many people doing this. Maybe even a possible cipher with that lower low. Potentially, yeah. Yep. This wouldn't be an X to A leg for me, but if you guys are familiar with cipher, I think what you're looking at is X, A, B, C, D. Yeah, this wouldn't be an X to A or an impulse leg or an anchor leg for me, just because it's not a sore thumb. This would be a sore thumb, unless you're talking about that, right? The latest move, X, A, maybe we get a 382 push down. That might be a cipher. Yeah, absolutely. So that's really what we're looking at on the pound dollar. Let's go to the euro dollar, and as always, we'll take a quick 13-minute break following the euro dollar. Let's go back out to look at all of the time frames here of what we were looking at yesterday. Guys, you got anything on the radar? You want to share anything with us? Any of the tier 1 guys? This is interesting, what happened yesterday on the euro dollar. Similar situation to the pound dollar. How stop loss? Where can we get those powerful videos? If you type into YouTube or go to my channel, Jason Graystone, which you're on right now, I think. Yep. Go into this channel and find my entire trend continuation strategy. It's a 5-video series. You want to start at part 1, you can learn the whole thing. Whole thing. You're definitely going to want to take your time learning that, and you're going to want to take lots of notes, and you're going to want to re-watch it over and over again. It is a real immersive series. Okay, it's not just a set of YouTube videos, it's a proper tutorial. Small ball cipher yesterday, 1 hour pound yen, X at 154.54. Target 1's hit, rolled stops to break even, but got stopped out on target 2, says Adam Logan. Adam is a cipher pattern beast. Adam's one of our tier 1 traders. He trades cipher patterns, and he's been having lots of opportunity lately. What about Bitcoin? We will go over Bitcoin. We'll take a look at Bitcoin at the end. We did yesterday. If you go and watch yesterday's recording, we took a look at that. Not much to say about it, really. What is the best advice you beginner to enter in Forex? Well, here we go. Here's a question for you guys. Without me answering, some kind of biased answer, what is your advice? Those of you guys that are in my community or on here, what's your advice? What's the best tips that you can give of getting into Forex trading? Particularly if in the tier 1 community, please feel free to contribute to that discussion as well. What days of the week do you tend to make the most trades on? Lots of mine lately have been coming later in the week. Wednesdays. Yep, Wednesdays/Thursdays. Learn. Ali says, don't put your money in the market yet. Yeah, look, the best advice, I mean, again, I've got lots of videos on this, but the best advice I can give on getting into Forex trading, and by the way, if you haven't already subscribed to our Trader Coffee Break, myself and Akil, we have trading discussions every Thursday at 3 p.m. UK time, and which is 10 a.m. Eastern Standard Time. We sit down with a coffee, we just rant about trading topics, fly on the wall stuff, and we already discussed getting into trading, so there's some real great points in that video. The channel is Trader Coffee Break. Type that in, the Trader Coffee Break, into YouTube. Go and subscribe to that channel. The next session, the next discussion, the coffee break is today, 3 p.m. 3 p.m. Paper trade. Yeah, look, you're going to want to, first of all, learn the basics. Okay, don't skip the basics. Learn some of the basics, but don't learn everything about the basics, if that makes sense. You end up getting paralysis analysis. So learn the basics, learn enough to move on, learn a strategy, learn how to read a price, learn how to read the charts, learn a strategy, pick any strategy, okay? One that preferably resonates with you as a person, something you understand. Learn the strategy back to back so that you know it inside out. Then go and test it. Get some historical data, test out the performance of that strategy. If need be, then refine it and optimize it and tweak it. Then go and demo trade it so that you can iron out any mistakes that you might make, nuances, things like that. Then you can go and fund a small account, get into it that way. The most important thing is that you just don't rush. Take your time, take it seriously. Just there's no need to blow your money. There really isn't. No need to blow your money. So what I think we'll do now is we'll quickly take a 13-minute break. You guys ask any questions, and we'll refill the coffee cups and we'll come back then. So I'll see you in a minute. All right, guys, welcome back to the live session. We took a little break a little bit early there because I just thought we got to past and it'd be good to kick off afresh following the hour. So we started at 7:30. If you've just joined us, welcome. A couple of questions in the break. When you start back testing, do you test strategies across multiple pairs? The best thing to do when back testing is to pick a strategy or learn a system, learn a strategy, and then go and test that one strategy across multiple pairs, all of the pairs that you, or any of the pairs that you intend on trading that system on. And then once you've done that, the importance of doing that, I mentioned this yesterday as well, the importance of doing that and the benefits of doing that is the way that you build and train your RAS, your pattern recognition part of your brain to see the patterns so that they pop out at you. You build discretion quickly. You see things in the market that you might not have seen before. So there is a lot of benefits to doing that. And then once you finish that round of testing, you might have had more ideas. You might want to go and retest a certain idea. But that's what I recommend. You pick one strategy, you go on one time frame, okay, and then test it across all the series of markets that you intend on trading that on, or potentially trading that on. The other one is, would you mind share an idea about pound yen at the moment? I'm looking for a buy. Is it still bullish? Yep, and we'll take a look at the pound yen in just a moment. We're going to go to the euro dollar now, then we'll go to the pound Aussie, then we'll go to the pound yen. So far, we've seen some developments, not so much in the Aussie CAD, but the Aussie dollar's seen a rollover to a nice support level where we saw a bounce up. There was a little structure-based buy opportunity there. The move's already been made, so nothing that interests me. You might be looking at what we call a 2618 opportunity, which is a second chance entry, but I'm not going to be looking at that. Pound dollar, we're seeing a retest of this most recent low at the moment. So I definitely don't want to sell yet until we break and close below it. I don't want to buy because we're not at a, this isn't a decent level for a structure-based long in my opinion. So I am looking for potential shorts if we get that full-blown reversal confirmation, which might happen later today. Euro dollar, we're seeing a lot of bearish momentum here. We not only got the rollover yesterday and broke and closed down at 1992 out of this channel, out of this support channel, but we're also seeing continued bearish strength here. We're not stopping. We saw a little pause here, a little shelf. Where was the shelf? Let's take a look at this, right? So this is where market pushed down to. We had this big channel going on, this consolidation channel. We rolled over, broke out, we pushed down how many pips here? We opened, we closed, 127 pips. And where did the market stop? Where did the market hit like a wall? Previous structure support, which was previous structure resistance. See that? So this would have been a decent level for you guys. We're actually going to look at this morning as a counter move, a structure-based long, a double bottom. But before we got to the pair, we've now seen the market continue down. So this isn't any longer a structure-based buying opportunity. We're looking for shorts. Okay, we are pushing down now, so we can look for shorts. Let's just drop down straight away down to the 60, and you'll see we've already had this little structure shelf play out, this pregnant pause, whatever you want to call it. But now what that means is if we close, if this candle closes down here, we could get a potential pullback and then re-enter here. We can just short this with real tight stops and look for an extension. And because of the amount of movement we've got to go, if we break this low, we could potentially just trail stops for secondary targets. Just keep trailing until we eventually get stopped out. So in other words, take some of your position off at a retest of the low and then just trail the rest down and squeeze as much out of it as possible. But that's what I'll be waiting for now. There's absolutely nothing here. You can't take advantage of what's happening now. This isn't tradable. This isn't a tradable situation. Not from any trading approach that I've ever seen anyway. If you guys trade some kind of momentum trading like this, where you're just kind of adding to positions, let me know. But this isn't the style of trading that I'm familiar with at all. And I don't know anyone else who is. But we are seeing some bearish movement. What I'd prefer to do is wait for the pullback, then jump on. Then I can maximize my returns and have minimal risk and trail stops to squeeze more out of the move. So again, we've had some developments on the euro dollar. There are some shorting opportunities on this pair now. Yesterday there wasn't, today there is. Or funnily enough, there was a shorting opportunity yesterday, which we drew on, but that was a different situation altogether. But this is a shorting opportunity. Pound dollar, potential shorting opportunity if we break and close below. The pound dollar is similar, except we don't have the break and close below. Euro dollar, if this candle closes below, we're game on. That's the difference. That's the difference. So now let's go to the pound Aussie and skim. I'm really just going to skim through this pair because I've got nothing. Have you guys got anything on this? By the way, if you have, let me know. If not, I'm going to really skim through this because it's just a big choppy mess that I don't want to get involved with. You can see here, it's very, very choppy consolidation here. Just next to the comment section here, you can see this consolidation on the 4 hour. Very, very choppy, very erratic movement. Even on the hourly, you can see how erratic that movement is. Nothing I want to get involved with whatsoever. I don't even want to look at it. Okay, so I just skip the pair entirely. Get over it. I'll come back to that maybe tomorrow, maybe next week. Next pair is pound yen. And I just want to reinforce the importance of being able to skip over pairs like that as well. I don't know about you guys, but I got into trading for a bit more time. The last thing I want to do is be staring at my charts all day, every day, for just looking at opportunities that aren't there. That's not what I signed up to. All right, so we want to move on and seek out where the opportunity is. We don't want to waste our time looking at where there isn't opportunity. So the pound yen was one of those pairs on the daily time frame, really didn't do a lot. We had the Asia session news out, didn't do a lot. We had FOMC out, didn't do a lot. Yes, we had a little bit of movement during the day, during the whole session, but nothing compared to some of the erratic moves we've seen in some of the dollar pairs. So we're still in consolidation. If we go down to the 4 hour here, let's just bring on. I hope you guys are okay with this when I keep changing the screen here. I hope you're following along all right. But this is real choppy consolidation. There's no trend here. Okay, will everyone agree there's no trend here? Because you can't have subjectivity. 100 out of 100 traders need to agree that there's no trend here in order for us not to look for a trend. There's no trend. Okay, so what we're looking for is any type of consolidation or ranging market strategy setup that will allow us to capitalize on this. And the only thing that I could potentially see on this at the moment is a potential advanced pattern of some kind. So the first one being here. This would be a butterfly. So I don't know if you guys trade butterfly patterns, but they're very popular amongst trading communities. In fact, when I was talking in Las Vegas, I was speaking at a Traders for a Cause event. There was a prop firm there doing a talk, and one of their traders only trades butterflies. That's all they do. The whole team just trades butterfly patterns. And this is a butterfly pattern. I don't trade butterflies because I didn't test them and I couldn't make them work because I didn't put in too much effort when I was learning ratio patterns, so I just didn't bother. So it's not for me, but if you do trade butterflies, that's really all you've got there. In terms of structure-based, yes, look, we're at this support level, but we've got a support level a little bit lower. What do we know about support levels like this? Usually the lower one is tested. Okay, usually the lower one's tested. So is this a high probability buy? No. Is this a high probability buy? Not really, because we've still got this level here as well. Okay, the major lows and highs are the decent levels for structure-based shorts. So if I'm a trend continuation trader primarily. I do trade structure-based setups and shorts and longs based on support and resistance, but only extreme highs and lows or certain price point levels that I've built into my discretion as a trader over the years. This would be the level that I'd be looking at for a potential buy as a structure-based long. Okay, any of these, they don't interest me whatsoever. So not too much on the pound yen. Actually, pound yen, was there anything specifically that you wanted to look at? Who did the comment come from? Tin. Was there anything specifically you wanted to look at? You're looking at a buy as it's still bullish. Yeah, look, let's just quickly jump out to the daily. Okay. Yes, on a longer term, it's still bullish. You could look for a buy, absolutely. You'd have to be a longer term trader, or if you're just taking trades in the direction of your macro analysis, then yes, you're still bullish. I just have rules around certain structure levels that mean that I'm on a paused consolidation period before I start looking for trend continuation. So absolutely, if you're looking for a buy, I think this is a great level. You know, I think this is a great level for a buy. And yes, we're still bullish. You can see the moving averages here still fanned out. We've still got the 8 above the 20 above the 50. Yes, we're still in a bullish trend. For me, I just won't be looking at a buying opportunity just because of what's happening at the moment. My trading time frame doesn't align with my prediction. Where I could get stops isn't going to meet my risk management rules and money management rules, so there's no setup for me. If you've got a way of entering and you're in a longer term move, then great. Dollar yen. This was really the only one that was on my radar this morning. Well, this and the euro dollar are on my radar. Euro dollar's just blasted through, so we might have a short on that. The dollar yen I was looking to short, but we didn't test the initial high. Remember what I said about a valid double top? A valid double top, the second top has to test the initial high zone, which in this instance is indicated by this little pink zone here. And as you can see, the second test is this candle here, and we didn't test it. If you check the high of that candle, you're going to see that it was 110.76, and the close of, or the open of this candle is 110.77. So it came a pip away, and a pip is a pip. You can't be half pregnant, right? It's the difference between is it valid or isn't it valid. So you have to understand that, because if you're one pip and you say it's close enough, then how are you going to maintain consistency? You have to have a rule around close enough. So if you say, well, close enough is one pip, well, then just make it one pip and don't worry about you say it has to come within one pip of the initial high test zone. That's it. That's the rule. And then you can't say, well, okay, it's one pip below that, so that's close enough. Does that make sense? That's not going to work, because the moment you lose consistency, the moment you break, you deviate from rules, then you've no longer got a consistent plan. So how can you expect to generate consistent profits? I know that sounds obvious, but you'll be surprised at how many traders do that. All right, so I was looking to short this. If I was to short this, by the way, guys, my target would have been an inside structure just above this level here. Okay, so you can see how a nice opportunity that would have been in terms of reward to risk. Talking 56 pips of reward. Now, this might still come up, by the way, because the move hasn't been made. This might still come up, so this is something that's on the radar still. Even if you're getting stops just above that major structure resistance high, looking left, you're still going to get a good reward to risk profile on this. Okay, so you're probably going to risk something like 20, 25 pips, something like that, to gain 56, which is pretty decent. Pretty decent. And if you're using an ATR above the double top, then you're going to have an even better reward to risk. It'll be something like this. So still on the radar, if we can miraculously push up and test that high zone and not close above the pink zone here. We can't close above 110.82, but we have to test it. As long as that's valid, we'll be in this and we'll be looking to short down to 110.17. So that's the main trade that was on the radar today. I've had 0 intraday trades this week. 0. That's just how it goes. I've had 1 swing trade. I'm risking 5% per trade. What do you guys think about that amount of risk on any one trade? 5% per trade. If you have 10 losing trades in a row, let me just give you my advice. 5% risk on every trade. If you lose 10 losing trades in a row, okay, so let's just say that you're on a losing streak and you lose 10 trades, that is 50% of your account. Now, in order to make up and get back to break even, you have to make 100% return on your account. Does that make sense? Now, I can tell you that the quickest I've ever doubled my account is 1.74 years. And that was a good year. So there's some truth for you. 10 losing trades in a row, that's 50% drawdown. You then have to make up 100% just to get back to break even. How many traders do you know have doubled their account in a short space of time? You could have 10 trades in a week. You could have 10 trades in a month. Yeah, of course it depends how you trade, Scott. Yep, that's true. Yeah, if you're risking 5% once a year or once yeah, absolutely. But I can tell you now that I have an absolute maximum drawdown of 10% in my money management system. I've never ever got to near 10%. Okay. 7.8, I think, was my maximum drawdown. So you want to be careful. I would say if you're using percentage-based risk, 1 to 2%, some of our traders risk 0.01% of their account. Some of our traders that have been trading for years. Obviously, they've got large accounts, but they're. I personally only risk 0.25%. Great. You want to be careful there, guys, honestly. All right, and then the final pair, just to kind of skim over before we wrap up. The weather is moody here in the UK today. We had a thunderstorm, I think, last night, and it's very humid still, but it's very dark. Where are you guys from? Let me know who we've got in the chat today. Whereabouts are you from? Whether you want to give a regional or a country or a nationality, whatever. Protect your profits and compound interest each week. Vancouver. We've got Vancouver. We've got Down Under. I know Mia's in the house as well. She's from Australia, near Sydney. Netherlands. Brummytown. Thanks for the advice. I'm trading on demo for just 2 weeks. Yeah, trading on demo is great, but it's really the last thing that you do before you go live. It's not. You can't learn really demo trading. You need to have a plan before you start demo trading. So be mindful of that. Hertfordshire, London, South Africa, Romania, Canterbury. Excellent. Soon we're going to be organising, aren't we, Naomi, a London trader meetup. Naomi usually kicks everyone into gear. If you're a tier 1 member, you get access to the Skype chat where we run all of the live meetups. We have drinks and trading discussions. Naomi, you need to get on that, by the way. Darren Keir says, just over the border in Kent. I live in the UK, Cambridge, but originally from Lithuania. Awesome. There's lots of different people in here today from all over the place. Well, I hope you've enjoyed these live sessions. We may do more of these in the future. I don't know. Depends how popular they become and how much value I can see is being transferred across, because that's my main goal, is to just get the truth out, get realistic expectations out, help traders, empower them around financial markets, around wealth building. There's a lot more to me than just trading. You guys who have been around for any amount of time knows. And if you don't know, check out my show later on today. I'm going to be running a live show on here at 8 p.m. UK time. But let's get through, who else have we got? Netherlands, Reading, India, USA, Tennessee, Germany. Amazing. 35 degrees today. Elbow cough. Yeah, Naomi, sort it out. Get the next meetup happening. We should be out of lockdown in 2025. I think an August one, early August would be a good one. Or end of July. Ireland, New York. Wow, excellent. All right, let's take a look at the New Zealand dollar then, and we'll call it a day. You guys have got any setups you want to look at, please let me know. Because after this pair, we will be done. Hopefully this has given you a real good insight into when the market does nothing, it's okay to do nothing. What happens next, how price reacts, and the importance of major structure levels, and what opportunity presents itself as a result of understanding how to read price, and then how to build consistent rules and have a consistent, disciplined approach to the market that will inevitably generate you profits should it have a positive expectancy. That is trading in a nutshell. It really isn't, it really is simple. Chelsea says, I'm very new to your channel. Can you direct me to videos you present for me to start off with? South Africa. If you're into trading, go and check out the, just fill your boots. Go and watch everything on the channel. Go and watch everything on the channel. But if you want to learn a strategy, you can go and watch the double tops one that I did a few weeks back. You can watch the trend continuation one that I did, but you really want to start honing in on the basics. If I have any advice for you guys, it's to go and check out the 2-week offer at tier 1. It's $1. You get to go into the whole platform, use the tools, surround yourself with the traders, get all the coaching, do the accountability stuff. You can play with the tools. You can join the live rooms like this every day. 2 weeks, no risk, and that's it. And then you'll really understand if that's something that interests you or not. And if it does interest you and you want to go all in, we've got everything that you need to become successful. And I can vouch, the tier 1 traders here, I mean, I've got tier 1 traders here in this stream. I can openly say that with confidence. Samuel Pollard says, respect, Jason. Well, respect to you too, man, for showing up and watching this channel. Thank you very much. And I would just ask, if you have got value from this, please share it. If there's anything that the world needs right now, it is to help retail traders, and it's to help people empower themselves financially. There's too many scams, too many gimmicks, too many fluff, too many gurus, too many people promoting strategies that are based on a fantasy and not universal principles that have stood the test of time, which is what we like to base all of our education off of. And if you got value from this, please share this to anyone who you think would find it valuable, and I really, really appreciate it. When planting levels, you are looking at for previous impulses and looking to get the most taps on a level. When planning levels, are you looking at previous info? Yeah, so there's something called quantitative analysis and qualitative analysis. If you are looking at structure, major structure, how do you define major structure? Okay, well, it could be going up to a higher time frame and looking at the tests of that level historically. You can start increasing the quality of that analysis by looking at how many times it touched it, and depending on how many times it touched it could affect how aggressively you enter. So for instance, you might have a double top. You might have a limit order if it's touched it 10 times. You might have a 3-bar reversal if it's touched it 8 times. You might have a double top if it's touched it 5 times. You might have a 2618 if it's touched it 3 times. Does that make sense? And you can test all of these different execution rules based on the aggression, based on the quality of the analysis. So it's a great thing to bear in mind. This is why that refining your edge is a never-ending story. You don't take a system and go and trade it into the sunset. It's impossible because it's deteriorating the whole time. So that's why it's better to teach you how to become a trader, a system developer. Check out the podcast too. It's great for mindset, a bigger picture around your wealth creation journey. Thank you, Barry G. Many thanks, Jason, always producing high quality content. Well, be sure to definitely give this a like, subscribe to the channel if you're watching on YouTube as well. All right, so New Zealand dollar's moving very similar to the euro dollar and the pound dollar, kind of cross mismatch of the two. We did break and close below the support level we were looking at. I'm just going to bring on the hourly time frame here because, well, in fact, let's go down to the 4-hour first because I want to show you. I just want to show you the support levels I've got written down here. So the support levels, where have we pushed down to here? We're in this kind of choppy zone here, aren't we? Next support level is really down here. So we've got some room to move. We have just put in a new low. Again, if we want to short this, stops would ideally have to be protective stops above structure. So you're talking about too much risk, unnecessary risk, when we could just wait a little bit more and see if we can either jump on a lower time frame or just wait for another new low and then a pullback. Now, of course, you're not going to squeeze as much profit out by waiting, but this just isn't, you don't want to get involved right now. You don't want to get involved right now. We've already moved. We've already pushed up to previous support, become resistance. Okay, look, we had the new structure low. If we're just looking from here, we had the new structure low, outside return. We had the new structure low here. We had the new structure low, outside return, new structure low here. Okay, now we've pulled back. Where have we pulled back into? We pulled back into previous support, become resistance, and we rolled over. So unless you was aggressive enough to catch that straight away, you don't want to be chasing this trade. It's done. It's moved. If you didn't get in this morning when I was asleep, you've missed it. It's pushing down now. So you're not going to catch that just yet. A couple of ways to catch this if you are still looking at it. As long as we don't retest this low, you might look at an aggressive short based on a bat pattern. Now, the great thing about taking a bat pattern this way is that instead of taking conventional targets, as long as this doesn't retest the lows already, this is still a valid continuation. So you could, if price pushes up now and we hit 71.38, you could then take this, but instead of taking conventional targets, you use it as your entry excuse into a trend continuation. And then you take target ones here. You take target ones that are retest to the low, you trail your stops to break even, and then you split, take off half of your position here, and then you trail down to the next major level of support. Then you could squeeze multiple targets out of this move by having an aggressive limit order entry. So that's something to look out for. At the moment, we're in no man's It's a decision point. Are we going to push down? Are we going to push back up? If we push up, we've potentially got another chance at entering this, whether it's the bat pattern or a Graystone trend continuation. If we push down, we could then look to short on a pullback. But that's really it. Thank you, Barry G. Kindly teach us harmonic. That works today. Sorry, I don't know what you mean. Harmonic PRZ. Would a 50% fib been enough to short it? A 50% fib means nothing unless you've tested it. A 50%, just using fibs alone doesn't carry any water. This is why we want an edge is built up of qualitative and quantitative analysis. And you want to combine the two for confluence, high probability, and an edge. Just trading off 50% retracement. It's like if you traded every double top, you'd go broke pretty quick. All right. Guys, that about wraps up the session. I hope you've enjoyed the last 2 days. We'll be back into the live room session as normal from Tuesday, so I won't be streaming on this channel. If you want to join us, you can. It's risk-free. You can come in for 2 weeks and you won't, there's no auto billing or all that crap. You literally come in for 2 weeks. If you get kicked out after 2 weeks, and that's it. If you want to reapply, you can reapply, but we don't bill you, contract you, or anything like that. If you want to join us, hope you've enjoyed it. Until next week, have a great rest of your day and the rest of your weekend. Don't forget to check out the Always Free show later today as well, and the Trader Coffee Break, which is at 3 p.m. UK time. I'll see you guys over there. Until then, I appreciate you all being there. Have a great rest of your day and weekend, and I'll see you then.